Hey, my name is James Dickerson and welcome to my YouTube channel. In this video, I want to talk about mortgage approvals. They're down. It's something we should look at. And the reason for that is because if they continue to go down, that's when the market could start crashing or drop a little faster than people might expect. Now, this isn't a big drop in new approvals, but what it does show is new approvals are down for new purchases. But more concerning to me is they're also down for remortgages, and those people could find themselves in significant trouble because they already own a property and they might get stuck on a variable rate of some sort that could really wipe them out financially. So before we jump into this, as always, if you're new around here, make sure you subscribe to the channel over there and hit the bell notification. We're on the way to 28,000 subscribers now. I'm pretty confident that we've just hit 27,000 at the time of recording this. You can check it around here. If we haven't, make us get to 27. Am I here? Smash like or tickle like. Do something to that like button. That really helps me with the YouTube algorithm. So quickly, just in case you're intrigued and maybe you're new around here or you haven't watched the video for a while, I'm in the south of France at the moment in this beautiful Airbnb. My girlfriend Katie and Amelie are swimming back there. I'm just having a quick time out before I join them, and I want to talk to you about mortgage approvals. Now, these are down at the moment, and they're a metric that I like to look at. I like to look at all this kind of data, like, are people getting approved for mortgages? Because if not, that means sellers of properties are going to have to take better offers if they are serious about selling, of course. Also, we want to look at things like, are people paying their mortgage on time? Are people in arrears? All this kind of data is important to get a real overview of what's going on in the property market at any given time. So let's look at March. So March of this year, there were 61,300 people approved for mortgages for new purchases. 61,300. So that's a fairly robust number. And actually, that's pretty good. It's similar to September of 2022, which was when we peaked. That was one of the busiest times for property transactions. That was during the pandemic still, where things just went crazy. You had 25% increase in house prices over a couple of years. And so everyone wanted to get involved and stuff like that. So the drop isn't massive, but it is something that we should look at. So the approvals on new purchases has gone down to 61,100, 200 down. Now, I know some of you in the comments are going to say, that's nothing. That's just an anomaly. Like, that could happen any month. Well, let's talk about the remortgages side of things. So remortgages in April that were approved were 33,000. Sorry, remortgages that were approved in March were 33,000. And that's not an insignificant number. But in April, it's dropped and more people are getting declined for remortgages. And that worries me. It worries me because if you already own a property and you can't get a new mortgage, and then you go onto the variable rate, you might end up getting in arrears, you might end up getting repossessed. That's when people get in real difficulty, isn't it? It's really a stressful time for a lot of people then. And if you're a new buyer and you get disapproved, then you just don't buy and you carry on with what you were doing. If you're renting, you have to carry on renting for a bit longer until affordability improves or something like that. So the remortgages approved were 29,000. So 4,000 difference in just 1 month. That is a big difference. More than 10% down in just a month. Now, a few things to look at this data is this is when rates started to creep back up. So it shows the impact that interest rates going up actually have. So if you can recall, at the end of last year, the market slowed down. I'm talking December 2023. The market was significantly slower. And so the banks, they wanted to get lending again. They wanted to get the market moving. So they started cutting rates. We saw a mortgage price war with all the big lenders, HSBC, Santander, everybody was on board with that. And they all cut rates significantly in January, February of that year. Now, that shows we had good approvals in March. Then March and April, the rates started going back up. March, April, May, June, they started going back up. And that means that affordability is going to be lower. It means it's going to be harder to get a remortgage, and people started to feel it. We're seeing that in the data here. So we're seeing in April, we had less new purchases approved, and in April, we had significantly less remortgages approved. So that meant the market was really, really tough. Now, where do we sit today? Because we don't have the data out yet. We'll have to wait a few months until we get that. But mortgages are getting cheaper again. So you've got a few things on our side here. One is a lot of people get a pay rise in April. A lot of those pay rises were above inflation. And that's one thing that is in the inflation data, that pay rises on average was 6%. So that would have helped a few people potentially get approved for a mortgage going forward. We also had another mortgage price war. In the last 3 or 4 weeks now, we've been talking about this on the channel. Mortgage rates have been dropping. We've had 0.5%, 0.75% with some lenders. We had some lenders that dropped rates 4 or 5 times. They were doing it every few days in order to just get that publicity and get themselves back in the news cycle. And that's why they were doing it in little increments. They know exactly what they were doing, and that's just to get in the news, to get that publicity. It's free advertising, isn't it? If you think of it like that. So what this shows is that potentially this number of approvals should start going back up. So when we look at the May, June and July data, we should start seeing more remortgages and more approvals going up. If we don't, however, that's when we need to worry a bit, because if with rates coming down, with wages coming up, house prices pretty much flat, if we don't see an increase in approvals, that means that we could be getting really tight with money being lent to people, and that means you're definitely likely to see some more house price drops going forward, in my opinion. So I'd like to know what you think about this kind of data. I don't talk about this kind of data very often, but I do look at this data myself. So I thought I'd try a new type of video with new types of content just to see what you guys think. So I'd like to know in the comments, is this interesting to you? What do you think? What should I be making some videos about? Some of you think I should just be drinking Lef in France. I'm happy with that. So let me know in the comments below what you think of this data. Do you think it's any indicator of what we might have to expect going forward? Or do you think it's just a one-off abnormality as rates were going back up at that period of time? Do smash the like button, guys, on every video. If you could do that, it takes you 2 seconds. Smash it on your phone. You can do it on the TV, you can do it on the iPad, and do subscribe if you didn't. I want to get to 30,000 subscribers as quickly as we can. Check out all the other content on my channel. There won't be many more in France, but do check out this video as well right here.